Alright guys, so this is the second part to the trendline video. I went through how to plot your trend lines and what to look out for in a trend. Now I'm going to go through how to apply different strategies. So there's a ton of different strategies that you can implement with trend lines. The two biggest ones being, or the two highest probability setups, are going to be your trend line bounces or your trend line breaks. So personally, the one that I implement the most is going to be a trend line break, just because I am a breakout trader, whether it be a support or resistance, supply or demand, or a trend line. I personally like breakout trades. That's just how I like to trade. Some people like to trade bounces. It really just depends on your personal preference and what strategy works the best for you. So a trend line bounce, obviously the goal first for both of these is to find the trend that is in place, whether it's an upward or a downward trend. And with a trend line bounce, your goal is to trade the trend. So however long that the trend is in place, you're just trading the bounces every time that the stock swings high or swings low. You want to draw your trend line and extend it to the right because you want to see where the stock could potentially pull back to that trend line. So that's why you always want to extend it to the right on a trend line bounce. Your goal here is wait for the stock to touch a trend and bounce for you to take a potential trade, whether it's the upside or downside. If it's a downwards trend, you would take puts once the stock rejects the trend line. If it is an upward trend, you would take calls once the stock bounces off of the trend line. Your stop loss would be set above or below the trend line. So if it is a downward trend, your stop loss will be set above the trend line, right above the trend line. And if it is a upwards trend, your stop loss will be set below the trend line. So let's go ahead and take a look at an example of this. So let's just go back to our SPX example because I have traded this before. So this would be a good example here. Now, just in this 3-year weekly chart, again, whatever time frame that you are trading the stock on, that is the time frame that you would take the trade. So if it is a higher time frame, obviously the stock would need more time to take that move or to make that move. So if you are trading on a daily, weekly, 4-hour time frame, you want to most likely be swinging that position because the stock is going to need time to make that move. If you are trading on your 30-minute, hourly, you're more likely to day trade the position, and then your intraday levels are better for scalping. Sometimes the 15 minutes also good for day trading trend lines, but for the most part, 5 and 2 minute are going to be your scalpers. 15-minute and to about an hour is going to be your day trades, and anything over that I would look to swing the position. So just in this specific SPX play, we are on the weekly time frame here. This is just the trend lines that I had charted in the last video, so I'm just going to show you guys. So let's say you were trying to trade the trend. So I'm going to look at the most recent action because I think that's the most helpful here. So let's say you were trying to trade the weekly trend here. So what I would wait for to make sure that the trend is a high probability trend is, again, at least 2 touches. So one thing that you don't want to do is trade this second touch. I just personally don't think it's the highest probability setup for you to take. I always like to see at least 2 touches on a bounce before I end up taking that play, especially if it's on higher time frames. So if this is your first swing high, this is the first touch, this would be a good entry for a bounce play. So what you would do, you could obviously in conjunction with whatever support and resistance levels you have. And remember, we said that the 4,300 is a support and a resistance level on SPX, currently a resistance because it is trading below the 4,300. When you are trading trends or trend line breaks or trend line bounces, you want to use your trend lines in conjunction with your support and resistance levels or your supply and demand levels. Those are going to give you the highest probability setups. So not only is this rejection of a resistance at 4,300, it's also a rejection of your trend line. This is a very high probability setup here, because as SPX is rejecting its resistance, it's also rejecting that trend line that we have set on the weekly time frame. So this would be a good entry for puts. How I would enter this position is I always like to wait for one candle to reject the trend line, and the second candle open is going to be the candle for entry. So this candle rejected the trend line here and rejected 4,300 on the weekly time frame. This would be your entry for puts into your next level of support, 3,900 and 3,600, whatever supports that you have on SPX on the way down. So you would enter puts on this weekly candle here, swinging into your next support. So let's go ahead and look at Tesla here. Tesla again on the weekly time frame here. Personally, what I do like, and I will say this, when I do take a trend line bounce, which is not very often, I do like to trade bounces on higher time frames. I don't necessarily like to scalp bounce plays on the trend line. I would rather take a breakout on a scalp. I think on higher time frames, when the stock has had that 2 to 3 swing highs or swing lows, it is a higher probability setup to take a bounce on the higher time frames. I don't necessarily like to take bounces on smaller time frames. I think it's a better setup to swing or day trade on higher time frames. So this is Tesla's weekly time frame here. We can see that it is currently in a downtrend. So it has created a swing high, touched once, twice, 3 times. Right here would have been a good entry. This is the rejection candle. This is the candle for entry into your next level of support on Tesla. Now, if Tesla pulls back here again to this trend line, you could take the rejection of the trend line back down. Always wait for one candle to reject the trend line, one candle to hold below. That is your entry candle. Obviously, most of the stocks in the market currently are in a downtrend overall, so that's why most of these are rejections here. So this is another example on Tesla. This is the hourly time frame. Like I said, I don't really like to go too low on a trend line bounce. So we can see here, over here on the left-hand side, Tesla was in a downtrend here before it finally broke out. So if we zoom in here, you can take multiple rejections. So this is your 1, 2, rejection of the trend line here, rejection of the trend line. This is actually a great rejection here. You would enter on this candle during market open. Stock made a nice move down, pulls back again, tests that trend line. You would enter on this candle here. This is an hourly candle, so you could day trade Tesla on this hourly candle. You could day trade Tesla on these hourly candles here. Rejection, rejection, rejection. It's not until right here where we get a breakout and into a consolidation. However, and into a consolidation period on Tesla, I apologize. So it goes into a range after it breaks out of that trend line. It kind of goes into a range and a consolidation. Okay, so this is a really good example of being able to day trade a bounce. So you can see here, holds the 30-minute trend line. You have your 2 touches here, 1, 2. Okay, this is your 3rd touch. Even if you don't take that 3rd touch, on that 4th touch, that's going to be the highest probability setup. Rejects. This is your entry candle here. Okay, you could either do this one. This is your rejection entry, or you could wait. You could take this candle, day trade. Comes back up, retest that trend line, take this candle for a day trade. Okay, so those are your bounce plays on any stock that you take. Now, so one type of trend line bounce that I do like is in conjunction with the v-wop. This is on a lower time frame, so if you're looking to scalp, this is a great way to scalp a bounce. You can only use this on the smaller time frames because v-wop is an intraday indicator, so it's not going to work on higher time frames. So usually I use this on the 5 and 2 minute time frames to look for a scalp. And this is what you usually look for. So let's say that this is Netflix's chart. The stock makes a move up, breaks that trend, creates a trend line down into the v-wop or up into the v-wop. So you can see here we have a slight trend on Netflix, creates a downtrend into v-wop, holds v-wop as support. You can take the breakout of that trend and bounce off of the v-wop as a trade as well. So now that we went through trend line bounces, I'm going to go through breakouts here. So this is what I usually trade. And again, when you're trading a breakout, when you're trading a trend line, the highest probability setup to take is with a significant level of support or resistance. So this is a play that I took on SPX. So this is a specific play that I took on SPX. Now, you can see that SPX was on a downtrend, uptrend this day here. This is the trend line here, okay? On the 2 minute time frame, created a nice trend up and then created a high. This is a trend line break here. So the first thing that you could do is enter here, okay? Breaks out of the trend line. This is your breakout first candle. On a breakout, you always want to wait for one candle to hold below the trend line. So you can see this is your breakout candle. This is your holds below the trend line. This would be your entry candle here into your next level of support. Okay. Now, this is a good setup. Breaks the trend line, breaks out. This is a better setup. You can see the 38.70, that was a level of support on SPX that I had. It was a strong level of support. Not only did it break out of the trend, it retested the trend. Okay, pulled back, continue down, pulled back, continue down, pulled back, continue down. It's not until right here the trend breaks, SPX breaks a level of support, that we also get a high move down, a higher probability, bigger risk to reward here on SPX to get a bigger move down. This would have been the highest probability setup to take. Not only did it break 38.70, it broke out of the trend. It's now reversing into a downtrend, broke out of a level of support, high, significant level of support, and moved into a downtrend. This is the highest probability setup you would have been able to take on this play. So for SPX specifically, or any stock specifically, if I am taking a scalp trend line break, I usually like to take it on the 2-minute time frame. I think it's the highest probability to scalp to take as a trend line break. You always want to wait for one candle to break out of the trend line. It's just like a level of support or resistance. One candle to break out, and then one candle to hold above or below that trend line prior to you taking a position. Okay, so let's look at another example here. We can see here there's a couple trend lines here. So on the 2-minute, you're not going to get significant trends, but they are going to be enough for you to catch a scalp, because that's the point. You're not looking to necessarily catch big moves, or you're looking to catch a potential scalp. And if you look at this one right here, trend line bounced, bounced, bounced. On this bounce here, you can see that it breaks out. This is your breakout candle right here. This is your entry candle. Now what can happen is the stock pulls back, tests that trend line, and then continues down. That is why your stop loss would be a break above the trend line. If this reversed, broke above the trend line, I would exit. However, you can see that pulls back and tests that trend line, which it normally does. This signifies that it's a stronger trend line break if it pulls back and tests that trend line before continuing the move down. You can see here, pulls down, breaks out, pulls back, tests that trend line, and then continues on a more significant downtrend. Okay, over here again, you can see here up, this is your swing low right here. 1, 2, 3. On that fourth touch, breaks out. Okay, this would be your breakout candle, this would be your entry candle. There is some indecision here before the stock makes the move down. Okay, and again, this specific chart is not charted properly, but you do want to use your trend line breaks on the 2-minute and 5-minute with your support and resistance levels in order to catch a higher probability setup. Now, if we look at SPX on the higher time frame, you can see that SPX is on a downtrend. Overall, you can see high time frame downtrend, and then on the 4-hour, we're on a smaller downtrend here. Now look at this. This was the 38.70 level that on the 2-minute I said was a high probability entry. It was a level of support. The trend line also broke and then broke below that 38.70 level of support. Now that 38.70, okay, on the 4-hour time frame is where the trend line falls for SPX. So on the 4-hour time frame, the 38.70 is where the trend line candle falls as well. So this signifies that the 38.70 is a strong level of support and resistance on SPX. Currently now it is a resistance because it's trending below 38.70. Once it breaks above 38.70, that 38.70 will then become support. So you can see here, actually this is a really, really good setup on SPX here. We can see that it rejected 38.70. It rejected this trend line. This would actually be a very high probability setup if it opens below the trend line here. This is your rejection candle. If tomorrow SPX breaks below 3,800 or the level of support here, we can see a move down to its next level of support of rejection of the trend line here. Now on the opposite hand, if SPX breaks above the trend line, I would wait for a hold above 38.70 for an entry for calls. For the test to the next trend line, it could reject here. You exit your calls, you can enter puts. If it breaks the trend line here, it's then breaking the daily trend line, and we can see a nice significant reversal to the upside. We are on higher time frames, so like I said, on the higher time frames, you want to look to swing. You could 100% day trade as well. However, a swing is going to be a higher probability setup. To go through an example of a trade that I took. So I took this trade this week on SPX on a trend line break, and I'll go through kind of what I did right and what I did wrong. And I reviewed this on Instagram as well. So this was the 2-minute trend line. So I was looking to day trade this for a move down into a reversal. And the reason I was looking to day trade this, I'll show you that in a second. But for the most part, this was a good play. My entry was off a little bit. So I want to show you something. Actually, I'll wait. So if I were to take this play, so I did take this play. My entry was at 11:58. I got entered a little bit delayed as I wasn't getting filled on the play for some reason. The entry that I wanted was this 2-minute candle here at 11:54. The reason that I waited till 11:54 is because whenever I use my EMAs with the trend line, and you can see I've plotted these EMAs here as well. So this is your breakout candle here. You enter on the candle that holds below the trend line. So you can see here the candle holds below the trend line. For me personally, if it is a riskier play or if I don't see futures selling off as much, I will wait for the stock to be able to hold below the 21 EMA prior to me entering puts. I like to see the stock trending below both of its EMAs to get a stronger trend to the downside. I ended up getting filled at 11:58. Got caught in the pullback and retest of the trend line. I was comfortable holding. My stop loss on this was 38.85, which was SPX's high of day. So I was comfortable holding it. Never got close to that 38.85 level. And it was just retesting that trend line. And if you look here, as it continuously retested, there was a smaller trend line here to the downside. So you can see here that it tested this smaller trend line. So it had a swing high here. 1 touch, 2 touch, 3 touch, and this is where it actually started to reject this trend line. So remember we talked about bounces and trend line rejections. This was a stronger rejection here on this candle. Rejected, broke the support, and that's when it sold off all the way. I ended up catching this entire move. I think my first target was 38.60. I locked some around this area. I think it was 12.49, and then the rest down here once it touched 38.50. And a good indication on this specific play, and this is why with any strategy that you utilize, it's not just one thing that you're looking at. It's a combination of factors that you're looking at that's going to be able to give you that opportunity to capitalize on a play. So yes, SPX could be doing this. It could be breaking the trend line. It could be trending below its EMAs, but you also want to pay attention to other factors such as market sentiment. So futures, I always watch futures when trading SPX. And if we go ahead and look at what ES was doing at the same time, I will show you. So this was ES's chart here. You can see at the same time, ES also had an upside trend line. Oops, swing low here. Okay. Came down, broke below the trend line. This trend line is not set properly. Okay. Came down, broke below the trend line. The reason that I held SPX all the way down to 38.50 is because my target on this was ES's v-wop. So I like to use v-wop as support and resistance, and you can see that ES went straight down to, I'm sorry, this is NASDAQ. Well, ES did the same thing, but I just want to kind of show you guys. So this is NASDAQ's chart on the same day. You can see similar price action. Obviously, SPX follows ES, so it makes sense. Sorry, I don't know if I said the NASDAQ. I meant to say ES. 5-minute trend line, same trend line that SPX held. Same move down and pull back. Right here, your EMAs cross, trend break, stronger trend down. Your target, my target on ES was its VWAP. As ES approached its VWAP, you can see that it tried to hold that VWAP area before continuing down. And that's when SPX also tried to hold that 38.50 level before continuing down. So there's multiple factors that go into whatever strategy that you implement. But just make sure that you have one where you know exactly what to look for. For SPX, for example, I like trend line breaks. I like gap fills. So I know that I need to watch ES and make sure that ES is giving me the move first prior to me taking a play on SPX. And same thing if you're trading any of the stocks that fall under the NASDAQ, Tesla, Apple, Amazon, Nvidia. You want to make sure that the NASDAQ is giving you the move first prior to you taking a trade. So futures trumps whatever strategy that you have. Make sure that you're implementing futures into whatever strategy that you guys are utilizing. But the trendline breaks, trendline rejections, and bounces are really, really high probability setups. Utilize them with your support and resistance levels as well as your EMAs and your futures, and you will 100% find high probability setups that you can potentially capitalize on.